Good morning, traders. Happy Tuesday, everybody. Hope everyone is doing well. I think audio and video check is good. All right, excellent. So we are going into yet another pretty quiet week. Anytime we have non-farm payroll, that first Friday of the month, the subsequent week is really very, very quiet in terms of scheduled data. This one is no exception. No hot zone aftermath in terms of a scheduled high impact event this morning. We have no hot zone heads up of any importance today. And that's not to say there's nothing else coming up this week. We do have PPI tomorrow. Is that going to be a data event that will keep price action in a range? Probably not, because there are a number of other things that are in play right now. So let's go over some of those here as we prepare for the morning. So we know that the broader averages continue to actually be quite supported. I think there's a way in which your average retail trader looks at price action. And that is there a new high? Are we seeing higher highs? Because most retail traders are buying at a high and they need higher highs to see follow through. And again, everyone has a style. But this is an uptrend. This has been an established uptrend for the better part of the year. We've been rebounding consistently ever since the April tariff driven, and it was a crash, not to use any hyperbole. That was a crash in April. So since that point, we've been trending higher for a lot of reasons. One, the crash was clearly overdone. Those of you in the long-term account growth side of what we do in the Sector Secrets Mastery know. I was talking about that for weeks, and we put out a video because I wanted to make sure everyone knew the 20% SPY pullback setup, all that stuff. And we bought into that dip as soon as it hit 20%. And really, that's a great place to put a sort of pin, a bookmark, if you will, and then look at the year from that April forward. So yeah, this is not as strong a trend as we saw as July wound down, but we also know that August, the other A month, August tends to be lower volume, lower volatility. The money goes to the Hamptons, summer break, call it whatever you will. It's usually the most challenging month of the year historically, not because all the same news narratives and macro narratives and everything else weren't in play, but because the volume is lower. Come September, we've regained the uptrend. In fact, we punched up to a brand new all-time high just the other day. So we're in a bullish environment. I'm giving you all the reasons as to why we're in a bullish environment, because remember, if things trend higher for a really long time, part of what is attention grabbing, whether that be financial media, whether that be television, whatever it is, whether you're on the internet or whether you're on the news, watch the news. Do I have to sneeze? I might have to sneeze. Which is always fun when I'm also on camera. Nope, I think it's going to pass. All right. So if we take a look at what's going to happen in financial media, at some point, new high gets boring. They've got to keep watchers and pay advertisers. So they're going to start to take the other side of the trend and say, well, these are all the reasons that it might be too high. These are all the reasons that it might be toppy, things like that. These are the reasons we're telling our clients not to buy. Who on earth would tell a client to buy at a new high? I wouldn't. I don't tell you all to do that. So, it's kind of interesting in that regard. Now, there is some talk that the Bank of Japan is looking to hike rates at the end of the month, which we know sometimes can cause some issues with treasuries. It's a little too early to really sink our teeth into that potential narrative, but that is expected, I believe, the 30th. That's a potential conversation. So as we go into the second half of September, we'll come back to that. But I at least want to introduce the fact that their chatter is out there that the Bank of Japan, the BOJ, could hike. We've seen previous hikes last year create a lot of melee. We'll see if that is going to create the same kind of impact now, but certainly something to keep an eye on. Expectations for the U.S. Central Bank, the FOMC, is that they can cut 3 times. There is some expectation, although very low probability for 4. But the idea that the FOMC is going to cut rates a half point in September is less than 8%. It's 82%, sorry, 92% that they're going to cut a quarter point. So that is baked into the cake, as it's said. All right, moving on then to a question about the long term. Surf fishing, we've been doing that for over 3 years now. So the reason I don't keep, I mean, well, if you want to do it this way, we can. I don't keep a long-term sheet of that because most of those entries, Surf, are so far gone. It's not even useful to traders to see what we did in 2022. But I'll show you the portfolio as it stands today. So on those Tuesdays, the first Tuesday of the month, where we do the long-term account growth, I'll share this with you all. These are the current positions that are open. I actually have to, NEE has been closed. I just have to remove it from this. But other than that, this is what the positions look like. And if you look at the date, some of these go back to September of 2022, May of 2024. So if you want to know what we're in now, what is most actionable, take a look at the alerts. And then on Tuesdays that we do the first Tuesday of the month, so 12 Tuesdays a year. If you want to take a look at this, I'm happy to break that down. But the reason I just don't worry about that is A, I'm not managing a portfolio for anybody but myself, right? And B, I don't want to irritate people with, but Rag, I wasn't with you. For example, in April, when you bought SPY at 648.83, right? There's no way I could even recreate a position to mimic that. So that's why it's a very timely thing. And that's why I send out alerts to members. And you might be, if you're taking a look at the alert section of the Sector Secrets Master, you'll see we sent out a number of them recently. So I would say, kind of go through the alerts and then just go grab the ones that haven't triggered. The most recent one was what? DRI. XLP came within 4 cents yesterday. Some of you might have grabbed that. We came down to 80.04 on the XLP yesterday. Our initial trigger was 80. I'm sure many of your alerts went off because you've probably got an alert 5 to 10 cents in front of that level. So some of you might be in that now. Others might be waiting. But yeah, take a look at that and it'll be super, super helpful. All right. Next up is questions. All right. So we talked about iPhone. Apple's going to release a new phone. I only mention that because Apple is so heavily weighted in the XLK and in the QQQ. And Apple has, as of this month, it's been a long time since Apple's been in an uptrend, but Apple is back to being in an uptrend. And so that's something I'm noting. It's an important stock. But here's an interesting thing about Apple. It's actually a relative outperformer within the technology sector that it belongs to. So remember, the technology sector is NVIDIA, Apple, Microsoft, and Apple's actually a relative outperformer. You see Microsoft, that looks awful. If anyone says, Rob, do you want to buy Microsoft? I don't hate my money, right? It might have a surge, but it's in a downtrend. It's been bearish since the 19th of August, right? So that's a big cup of nope. NVIDIA is also a big cup of nope. So really interesting that you're seeing a lot of the melee and tech in the XLK sector. Apple's actually one of the standouts there, and they're getting ready to introduce the iPhone. Oftentimes there's a little bit of optimism going into that. We'll see how that plays out. But Apple's absolutely, if we're interested in technology, which is by no means an outperformer in the current environment, Apple would be one of the contenders, right? If we were open to that. Destin said my alert didn't go off. Yeah, it wouldn't. It didn't touch 80, Destin. It got down to 80.04. If you had an alert 5 cents in front of 80, then you would get that. Right. It didn't get to 80. It got to 80.04. So unless your alert was at 80.05, that nickel that I mentioned in front of the alert level, right. And that's a great reminder. If there's a level that I send out, whether it was yesterday's Google, whether it was yesterday's Archer Daniel Midland, whether it's one of the long-term account growth alerts like XLP, whatever that alert price is, remember, our alerts are trades about to happen, not trades that have happened, trades about to happen. So we know where we want to do something if price gets there. And my usual advice is, what I do for myself is I place an alert 5 cents in front of that trigger price in the alert. So that's all oftentimes very, very helpful. All right. So pre-market, bell is rung, but pre-market, the indices were hovering around the previous session close. The Russell was slightly below. Dow, S&P, NAS were slightly above. I mean, they're just kind of hovering around. The NAS is by far the strongest, though, of the four. Strongest by way of the fact that it's got the best position above, the clearest position above the previous session close. Let me show you what that looks like here. So anytime you see an individual stock above its previous session 4 p.m. cash close, remember, that's the line where people say this is above yesterday or below yesterday, right? If people say something's positive or negative from the open, positive or negative from yesterday's close, positive or negative based on what, right? And most often it's going to be the previous session close. And that's why we have this, hang on, where's my drawing? Where are my drawing tools? What is a morning without drawing tools? All right, there we go. So that's why we have the label available to everybody in the Sector Secrets file drive. And then there'll be a line on the chart that accompanies that as well. All right, so let's get to it. I'm going to move the daily and the hourly aside. Let's get to work. Yesterday, we had some pretty interesting day trades. Some of you had an even better morning than I did. And I'll tell you what, gang, as someone who's, chosen to be a trader for their adult livelihood and then chosen additionally to teach traders, when you all do better than I do, I got to tell you, I couldn't be happier. And one of the things that many of you did yesterday, which is totally fine with me as long as you're managing risk, is you took a very valid double dip, right? What's a double dip? It wasn't a double dip. It was a retest of the very level that we were looking at yesterday on our two setups. And that's fine. The second test of that zone in silver and in Amazon ended up being fantastic moves higher. The first test had a nice move to the target. The second one kept right on going past the target. So if a trade has a static level, like a Darvis 2.0, or if for whatever reason we're using the previous session close as a static level, those are things that we only have to, run against whether the structure still suggests it's valid to take. So super thrilled that a lot of you had a fantastic morning. We had a pretty darn good morning. And I think every coach, mentor, teacher wants to see their students excel beyond what they did. Otherwise, what's the point, right? I want to see every single that next generation of traders. And, as I tell many of you all, I want to reach and teach you because I want to reach and teach the nephews, the nieces, the grandkids, the daughters, all those, that next generation that's already being brainwashed by Wall Street, that they can't do this on their own. They use all this ridiculous, complicated language. It's tennis, gang. Remember, the scoring of tennis is really nonsensical until you understand it. It's not linear in any way. It's really weird. And the whole reason was they designed that to keep people from understanding the game, to keep other people from playing. They designed the complication to keep people out, right? And to me, it's not that complicated. It really isn't. Find a trend, buy a dip. And even though that's oftentimes made fun of, that's my 30 years and I'm still here finding a trend and buying a dip. Now, can you just buy a dip? See, that's where it gets into trouble. So when we embark on our morning, I'm going to try to find a trend. I'm going to try to find things that are trending. Let me move to the right edge here. There we go. I'm going to try to find a trend. Is the NQ trending? No. So is buy a dip valid when we don't have a trend? No. Right? Buy the dip is not valid when we don't have a trend. Okay, Rog, well, if we don't have a trend, what's the next thing we can do? We can try to find one. And I'm looking at crude oil, bonds, silver, gold, Russell, Dow, S&P, NAS. I'm looking at our sectors. XLC right now has a trend. So when I look at trends here about 5 minutes after the bell, now what's happened in the last 5 minutes? Volumes come in, spreads are beginning to normalize. Right, the initial candle of unusual size is probably printed. Let's see, KRE is in a trend, XME is in a trend, GDX is in a trend. So these are all the sectors that are in early signs. They're early trends, right? 935 is pretty early, but we're in an early trend in those sectors. So if I'm looking for strength, if the NQ is the strongest, it is, right? Which sectors make the most sense of that group, XLC, XLY? If the Dow begins to strengthen, right? Again, which sectors make the most sense, right? I'm going to go right back to that group. It's going to be XLF for sure, XLV. I would say easily keep an eye on KRE. I would also throw in XME in there. All right, well, GDX is on that list. Let's take a look at gold. See what we've got there. Yowza. All right, gold is moving and grooving. Golly, do I want to pull back buy on gold? A lot of times gold pullbacks into the daily price movement range are going to be pre-market, which is to say that gold is a 23-hour market. It's on a 9:30 to 4, right? Stock traders think the only market in the world are stocks. The very thing that they talk about the most, the S&P, trades 23 hours a day via the futures. Okay, so there we go. Let's see. What else do we have? So, bot, you're telling me something. I'll look at that in a moment. Yeah. Sorry, I see bot slacking me something. I'll circle back there a little bit, bot. Okay. By the way, top tier will be sent out a little bit later on. I just got a Slack from that the top tier has been posted. I'll send that out as an alert in a little bit. And that's a really good recap of some basics that we consider for those weekly time frame conversations, which we can do after 10:30 a little bit later here this morning. All right. As far as the chop and trends, oh, you know what, Nick, you're right. I might be on the wrong, hang on. I might be on the daily, not the intraday. Oh, my bad. Yeah, that could be very different. Let's see here. What has trends? Let me go back. Sorry, gang. I was looking at the daily. My bad. So let's go back. Early trends are, well, none. Nope, that's my bad. Early trends are none. Early bullishness. Okay, so no trends. Thank you. Yeah, so let's go to bullishness because some of those are bullish. Early bullish signs are in SMH. XLY is still there. So that would actually just change this just a little bit because the NASDAQ strength is still valid. Early strength, also bullish, is in financials. So luckily not too different. XLE. That's it. So let me just modify this. Thank you, Nick. That could have been bad. So what makes the most sense if the Dow starts to strengthen? It's actually these two. So luckily the process is the same, even though I was looking at the wrong time frame. Yeah. So if you want to take a look at the screen that Nick referred to, and thank you, Nick, it's screen number 2. That's on everyone's screen right now. You can toggle on over there in the room. There's 4 screens running when I'm on the mic. And you'll see there, see how each one of those sectors has the Momo and the trend? So I have no trend, but there's bullish Momo in semiconductors, consumer discretionary, financials, energy, and that's it. There's bearish momentum in KRE, bearish momentum in GDX. Interesting. So GDX is not moving at all with the GC, which, remember, sometimes gold miners will move with the Dow. Right? So take a look at Newmont Mining, which is something that I do want a piece of. Yesterday, we were looking at Newmont Mining for a potential swing. I am interested in that one. I'm not in any way going to day trade it, but it could be an interesting swing. All right. So yes, thank you for that. So, but you see how easy the correction was? I just go back to look at what has trends, none, but what is bullish, semis, consumer discretionary, financials, energy. And we'll see what we get after 9:45. So the same thing applies. If the NASDAQ is the strongest, which sectors make the most sense? Semiconductors, maybe consumer discretionary. We'll go back there. It looks like XLK is trying to organize too, which makes me curious about Apple. So index sector stock on the right time frame, which is the 5-minute. Apple, yeah, not so much. Okay, let's take a look at NVIDIA. Heaviest weighted stock in semiconductors. Yowza, that is not a pretty chart at all. What about Taiwan Semi? Well, that thing went straight up. Okay, interesting. And how about financials? Let's take a look at JP Morgan. Okay, how about energy? Exxon. Okay, so some of these are actually looking interesting if we move back down to support levels, but what an odd morning. What an odd start to the morning. All right, let's see. So expectation for rate cuts seem to still be in play, but not a lot of clarity at the moment. You know, there's oftentimes something they call a September surge in employment. I gotta wonder how much traders are braced themselves for September's non-farm payroll in case it looks a whole lot different than August did. Let's see. We got some geopolitics. That never helps. Some geopolitics going on. Yeah, before the bell, gang, around 9:15, so about a half an hour ago. Yeah, you've got some geopolitics going on. So I don't want to go there, but anytime that happens, that's not going to be good for the stock market. Okay. So not much I'm seeing. I have a couple different news feeds, not because I'm trading the news, but I just want to see what the general concerns or optimism is. Not much. And if you turn on television, do mute it and just keep closed captioning on. A lot of the same stuff's going to run along the bottom or as a headline. Bloomberg's really good for this. If you like to watch financial TV muted, as I do, Bloomberg's really good for that because they're constantly running all these headlines in a myriad of markets. It's actually a very good muted channel to keep on if you're looking for some kind of news. And of the 9 monitors I have, the 10th spot is actually a TV because I'm not ignoring the news. I don't want to trade it, but I do need to be aware of whatever shenanigans might be going on. All right, question about Archer Daniel Midland here this morning. Yeah, that was a setup from yesterday. So yeah, as I'm waiting for some kind of day trade to set up, I'd say gold is on the radar, gold futures. So I'm just going to put here GC. So yeah, let's talk about Archer Daniel Midland because we do a lot of things in this room, right? The first hour of the day, we look for day trades. The second hour of the day, we look for swing trades and also potential long-term trades. And one of the trades we looked at yesterday and sent out an alert for was ADM. Now, I wanted to buy ADM when it got down to 61.53. Now, I sent that alert out, and the timestamp matters, gang. The timestamp matters a lot. I sent that out at 11:39, so right around here, right? It's a 5-minute chart, 11:30, 11:35. There you go, right around there. We never got back down to, in fact, the lowest that we got was 61.57. Now, if you were able to grab that, it was 4 cents shy of my trigger. Is anyone in ADM? Now, I can say some of you might be in ADM because if I have a swing trade alert that goes off saying that a price reaches 61.53, your alert should go off at 61.58. Right. 61.58. Now, this did not touch the trigger, right? So by all intents and purposes, I can't say, well, I used an active order. I've always found it super irritating when someone says, well, you didn't read my mind. I did this and this and this, but I didn't tell you. Never going to do that. So we did not touch 61.53. I don't have a fill. But I know a lot of traders in the room, especially if you've been here for a few months, you get consistently more comfortable with putting your alert in and saying, you know what, Raghee said, if it's inside of 5 cents of the trigger, I can act. And if you did, great. Your first target is either 25% premium gain or 62.75. So I see almost 50-50 yeses and nos. Very interesting. If you're not in, like myself, no problem. We'll continue to look for more opportunity. If you are in, pay yourself when you can, not when you have to. If you're up 25% on premium paid, that's always a choice. If we hit 62.75, which we have not yet, that's also a choice. Okay. So yeah, just some clarity on that Archer Daniel Midland. If you had the 5 cent trigger, it went off, right? The alert for the 5 cent warning went off, but the actual entry did not. Okay. All right. So moving on then. And by the way, every day in this room, I will send out the recap. So if I have a trade that triggered, you'll see it in the recap. Okay, Tuesday, this is what we entered, and you'll see what I paid and everything. If you don't see anything pop up, then you know I did not get a trigger. I'm just about done, Mom. So I'm gonna go ahead and start taking a look at gold here, and yeah, let's get on with our morning. All right.